everyone. My name is Colin Scarola, and I am presenting today CFRA's Aviation Key Predictions and Top Stock Picks for 2023. And this video coincides with a thematic research report that you can also find on MarketScope Advisor. So, quick spoiler alert, two of our five-star top picks for 2023 are Boeing and Airbus, the well-known commercial aircraft duopoly. So to give you all a little bit of context on how these companies have performed in a past recession, we're showing you that from 2007 to the trough of their commercial aircraft deliveries during the Great Financial Crisis, Boeing and Airbus combined aircraft deliveries fell 4%. So keep that number in mind, a 4% downturn. Now, looking from the peak deliveries in 2018, so this is before Boeing's MAX crisis, before the pandemic, to 2022 current rates, these two companies have seen a 29% drop in combined deliveries. So obviously that is far, far worse than what they saw during the Great Financial Crisis. So this leads us to the minus 10% number on the screen. We think a severe 2023 recession would be no worse than a 10% downturn in aircraft deliveries for Boeing and Airbus relative to that 2018 peak. So if you go from around 1,600 deliveries in 2018, you drop it down 10%, you're at around 1,445, and that's even in a severe 2023 recession scenario. Now, interestingly, that would be a 26% increase from where these companies are currently delivering, and that is because of the supply chain problems, much more so than a demand downturn at this point. So suffice it to say, we think even in a severe recession scenario next year, the demand would be there for these companies to grow their combined aircraft deliveries at least 25%. So the question becomes, can the supply chain support that kind of growth in Boeing and Airbus deliveries if the demand is there, as we think it is? Well, we think the supply chain recently made a major improvement that is sustainable into 2023. So now we're showing you a key supplier for both Boeing and Airbus is GE Aerospace. And their LEAP engine powers both the 737 MAX family and the A320neo family. It has the majority of engine share on the A320neo family. So you can see on this chart, in 2018 and 2019, GE Aerospace was delivering around 350 to 360 engines per quarter on average. They've been in a deep valley during the recession years of 2020, 2021, and first half 2022 due to skilled aerospace labor shortages and supply chain problems. But just recently in Q3, engine deliveries jumped from 226 in Q2 to 347 in Q3. So more than a 50% increase. And we think this is a key leading indicator that the supply chain for Boeing and Airbus is finally starting to ramp up at least 25% growth in deliveries for the aircraft duopoly next year. So we really like Boeing and Airbus. These are our top aircraft stock picks for 2023. Both carry our 5-star rating. And a big part of this is we like the fundamental trends for the companies, but we also think the stocks are still very attractively priced. So we're showing you here the market cap for Boeing is down 56% from its pre-pandemic high, and Airbus is down 20% from pre-pandemic high. We think the best earnings days for both companies are still ahead, and 2023 is going to be a major growth year. So we like both of those stocks heading into 2023. Now we'll switch gears and talk about the customers for Boeing and Airbus and airlines. So we'll talk a little bit about the demand environment for airlines. So you need a healthy economy, and for airline demand, and a big part of that is job growth. So we know that job growth has remained incredibly resilient this year. It's averaging over 260,000 jobs per month over the last 4 months. And we don't think that's going to change over the next year, because what we're seeing is that there's still over job vacancies in the US economy. And that is up drastically from pre-pandemic levels when we had about 7 million job openings. We're up 3.3 million from that to about 10.3 million job openings currently. So we think there's still a tremendous room to run on job growth, which is going to translate to good domestic leisure demand for airlines. Another chart we really like for airline demand is the amount of savings that US households have. So here we're showing you the checkable bank deposits and currency held by US households. That was at about $1 trillion before the pandemic, and it's now up to 4.9 trillion. So an increase of 3.9 trillion, and that's with a T, that's not a typo. So as hard as inflation has been on US consumers and households, they have record and importantly still growing savings. And we think this is going to lead to continued strong demand for air travel next year. So that's on the consumer side, but we also see corporate and international travel accelerating in 2023. And a key data point we think points to this was Delta gave us some results from their December corporate survey. And that survey showed that 93% of corporate respondents plan to spend more on travel in Q1 of 2023 than they spent in Q4 of 2022. So unlike a lot of the fear we're hearing that the corporate travel environment is starting to weaken, this is real data showing it's likely going to accelerate into 2023. And on top of that, key international markets such as Japan, South Korea, they only very recently began allowing international travel again, just back in October. And we've seen it can take up to 6 months for those markets to normalize. So we've got a lot of runway for the international recovery, especially with China, one of the largest international markets, is still in the very early innings of recovery, but we think that China is also trending in the right direction. So between what looks like strong job growth, very strong household savings that are still growing, the corporate and international travel recovery is still being very nascent in our view. We think the supply and demand and the fundamental setup for airline into 2023. We're laying out for you here 4 of our 5-star airline stock picks that are our favorites heading into 2023. And the way we select these airlines is we want them to have manageable debt levels, a history of free cash flow generation, and we want them to have a margin of safety in the valuation. And we think these 4 stocks possess all of those characteristics, and we're showing you here they're all down at least 40% on market cap from pre-pandemic highs. And again, we think the best earnings days for these airlines are still ahead, with 2023 looking to be a strong growth year for earnings in our view. So we like the opportunity to buy these stocks with such depressed valuations. And that concludes our top aviation stock picks for 2023. Thank you for joining us.